Let's discuss about AML transaction monitoring. What is AML transaction monitoring? AML transaction monitoring is basically a software support that allows banks and other financial institutions to monitor customer transactions on a daily basis or real-time for risk. The real-time and daily monitoring of the customer's financial institution's activities are called transaction monitoring systems or solutions. Transaction monitoring solutions analyze a customer's historical information and entire account profile. Thus, financial institutions can get to know your customer and take measures against any money laundering risk by quickly determining the customer risk level. The transaction monitoring software caters an alert when a situation violates the rules and is against the customer profile during the customer transactions. Once the software generates an alarm, the transaction monitoring process conducted by AML is automatically stopped, and the cycle continues to be executed and reviewed by the firm's compliance or risk department. The suspicious transactions are reported to AML, CFT, and KYC regulators when a crime is detected in the customer's transaction. This report is known as the Suspicious Activity Report. Some of the activities that are covered by the AML monitoring process include currency exchange, withdraw or deposit, transfer or F transactions, payment transactions. Why is AML transaction monitoring essential? Plethora of reasons lies that why AML transaction monitoring is essential. The very generic reason is to detect the suspicious financial activities randomly, such as large cash deposit or wire transfers. This AML transaction monitoring may be the biggest tool for the organization to stop financial crimes before they happen. Below is few more explanations in the same context. First is expansion of financial transaction circle. Second is necessity comply with changing regulations. Third is detection of financial crimes. Fourth is access to necessary information. Fifth is avoiding risks and financial sanctions. With the rapid advances in technology, the field of financial transactions has expanded significantly. Electronic payment instruments and plethora of transactions methods have become more popular and convenient than cash payments because they save time and allow the transaction to be done without any delay. Simultaneously, the practices of electronic transaction has also expanded the monitoring scope of AML systems. Additionally, more effort may be required to control electronic transactions. Therefore, having an AML compliance program is more conducive than before. A consistent global struggle against money laundering and terrorism financing is in practice, and in line with this struggle, many laws and regulations have been prepared for companies from past to present. So in accordance with the new global challenges, new AML regulations needs to be published. Also, each country has specific AML or CTF regulations prepared by the government. For example, there are currently about 9 act plans in the U.S. Congress with AML content moving forward. The constant change in regulations and the new policies implemented requires businesses to update their compliance processes regularly. In this context, compliance teams play an essential role in determining the customer risk profile in the light of new policies and procedures. Electronic financial transactions and the increase in online processes with the Internet's age provide new ways of money laundering for criminals. AML compliance regulations and the transaction monitoring activity plays a key role in detecting increasingly complex financial criminal activity. The firms must be well known with the fact that how they will get the information they need. Therefore, the AML transaction tracking system should be clear and understandable for companies. At this point, companies can largely avoid their workload with an AML compliance team. Those are expert in creating the right analytics and can save time. No doubt stands that the most damaging factors for company largely depends if AML transactions are not properly monitored. Also, there are many money laundering scandals against this provision. These countless money laundering scandals have been enough reasons to cost the companies dearly. For example, in 2018, more than $2.9 billion in fines were imposed by global financial regulators for AML disputes. In 2019, this number doubled. Thus, companies have become increasingly aware of the need to implement effective AML transaction monitoring. What is transaction monitoring software? Transaction monitoring software are the computer-based tools or applications that helps financial institutions automatically spot suspicious transactions, such as high-value cash deposits or unusual account activity. It is a key part of the AML anti-money laundering process, which is heavily regulated by government bodies. How does transaction monitoring software work? Transaction monitoring software monitors every data point related to a transaction and feeds that data through risk rules. The system then automatically flags or blocks suspicious actions, such as unusual transactions or account activity, transactions over a certain value, domestic or international transfers over a certain value, large cash deposits or withdrawals, also known as transaction velocity, unknown source of inbound and outbound funds. The data for these flagged transactions is usually compiled in a special file called a SAR. Why is transaction monitoring software important? Financial institutions must comply with anti-money laundering regulations, AML. A key part of meeting these guidelines is to monitor and block suspicious transactions with transaction monitoring tools. Transaction monitoring software can help you do the following: avoid AML fines, give confidence to regulators and banking partners, reduce the operational cost of manual reviews, manage customer accounts with a risk-based approach. The challenges of deploying transaction monitoring software. Transaction monitoring software is a legal requirement, but it tends to divide companies and risk management teams when it comes to its effectiveness. This is partly due to the following reasons: added expense. Transaction monitoring tools can be either deployed on-premise or be outsourced. Either way, it is expensive to integrate, monitor, and update. Resource-intensive. Software helps you process a lot more data as you scale, but you still need a fully staffed risk management team to manually verify alerts and to produce reports. Time-consuming. The large number of alerts to monitor can require a tremendous amount of time and effort from the compliance department. Let's look into the names of the top 10 softwares. First is Sign. Second is File Invite. Third is Clearview KYC. Fourth is Process Gene GRC Software Suite. Fifth is ML Verify. Sixth is Biz4X. Seventh is SAS Anti-Money Laundering. Eighth is Actimize. Ninth is AML Check. 10th is Token of Trust Identify Verification.